Hello, this is Brian Rezny, President of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. We are firmly into the last quarter of 2022. Of course, volatility, as I talked about beginning of the year, is definitely here. We seem to have hit a double bottom low in the overall equity market. What does that mean? We're hoping that that's going to hold, and we'll at some point as we progress through the last quarter of this year start to come back out of the 25% decline we saw in most of the equity markets in the U.S. So we're hoping that's the bottom. I can't guarantee it, but a lot of indicators that we look at on the technical aspect seem to be in place. Sentiment is at the lowest point we've ever seen in history. Sentiment is what institutions, investors think about the economy, the markets, pessimism. It's the worst we've ever seen in my over 30 years managing money. And usually when things are that negative, that then becomes a positive. So it's kind of the reverse of what you would think. When everybody's negative, there's nobody left to be negative, and things often reverses, which is what we're starting to see with this potential double bottom. One of the things I want to bring up, and I've talked about this a lot in update videos, volatility is normal in all asset categories. Whether it's the equity market, the bond market, gold, real estate, it doesn't matter. Nothing goes straight up, nothing goes straight down. Remember, 6 steps up, 2 steps back, repeat the process. That's how investing works. Nobody likes volatility. Nobody wants to see their portfolio worth less, but it's the nature of the beast. And I talked about this repeatedly through other videos. If you look at the bond market, which generally speaking are positions that we hold in bonds and client portfolios, have actually done quite well this year. Generally speaking, if you look at the long-term treasuries, safest investment in the world, if you look at the TLT, which represents 20-year plus government treasuries, is down over 30% year to date, even substantially more than the equity market in the U.S. So yes, bonds can be risky. Bonds were not a safe haven. Now, we did not own 20-year treasuries. We owned mostly short duration and floating rate type bonds in our client portfolios, which helped buffer a lot of the storm. And some of those are down mildly or actually kind of net break even. So that was the right place to be. We're going to be making a few adjustments to portfolios as we feel that as a potential double bottom is in, we want to basically add a few other categories to the portfolio that were overly beaten up, that we feel will come back a little bit quicker and hopefully recoup some of the losses. As we progress again into next year, we see inflation continue to abate. We see the Fed definitely raising rates at least 75 basis points at the upcoming meeting. And then at that point, maybe they'll start reassessing the situation. A lot of the leading indicators that won't get factored in to really the inflation numbers for the next 2 or 3 months have been rolling over substantially the last 3 months. That means inflation should start to come down quite a bit as we get into 2023. Could we see 2 to 3% inflation sometime mid-year? Potential. And if the Fed overdoes interest rates and really slows the economy down, we could even see deflation. Are we in a recession? I firmly believe we're already in recession, but it's a rolling recession. There's little pockets that have slowed down, and they kind of move around a little bit. So remember, a recession isn't the end of the world. A recession means you slow down a couple miles an hour from a 70-mile-an-hour zone. It's not that you stop the car completely. Recessions are normal. Again, you go up 6 steps, you come down a couple steps. It's a normal process of the economy, investing. I firmly believe we hopefully will see a little bit greener pastures as we continue the last quarter of this year, but certainly in 2023. If you have any questions about your portfolio, any concerns, we are always here for our clients. Please give the office a call. And as always, we appreciate your business, your trust, and your referrals. Have a safe and profitable day.